Great. Good morning, good afternoon, good evening, depending on where you are in our great world. My name is Michael Filighera. I am with Traders Helping Traders, Logical Signals, and I am here and open to discuss what you as the viewers want to see or look at today while you're maybe filling that in. I'm going to put this over there. And I am just basically going to give a little bit of talking about the S&P, which is one of the markets that I do cover um, and trade, as a matter of fact. And as I heard the tail end of what Matt was talking about, and just really speaking that it's been a difficult market, that, in my view, is an understatement. The markets have been completely difficult and not really because they're not deciding what they want to do. They're just trying to factor in all the details. And so we get kind of keep getting caught up in news events, basically. And so it does kind of make it a difficult market, particularly for the indexes in how and what we believe is coming. I am an Elliott Wave tician, I guess you could say. I have been using Elliott Wave since 1989. And I publish my analysis and have done it internationally on a daily basis in print. But now I do provide it via actually memberships on YouTube. But I've been publishing on YouTube and presenting analysis for about the last 3 years. So let me just see if somebody's. Hey, Randy, good to see that you're here. That's a blast from my past on the Pacific Stock Exchange, folks. Hey, Randy. Um, okay, we're going to start with that was a good one. OSPN. Now, mind you, most of these I've never really checked out before. One span. Now, normally, if I'm going to really start to look at something, I start at least on the daily to kind of get an idea of where the market is coming from. I'm going to go one higher and take a look at a 5-year. All right, that gives me a much cleaner picture. We can see on the long-term picture that the market, along with everything else, seemed to have topped, well, this one in 2020, and then kind of came down in an ABC, which was corrective, and then went up in 3, which is also corrective, and then kind of came down, and looks like they may have finished it. So they're on, at least on a weekly chart, the market seems to be involved in putting in 5 waves up, which is more of an impulsive move after the correction. Now, not knowing anything about the company, I kind of can say that I got 1, I got a 2, and then I got a 1, 2, 3. It might just have a little bit of period of correction coming up. But if I had to kind of say what I thought, let me just kind of put something up. If we're just going to run straight fibs down to here, which is just going to give you going up all the levels that it would have to break to prove itself. And right now, it's not doing such a horrible job. It's getting ready to just come into what I call 50% retracement. And all I'm looking at right now is from that high to that low. And that would suggest that 2049 or 2050 would be a resistance area. And that is just on a Fibonacci basis. That's not saying anything Elliott-wise. If it continues to rally, your next level is 2352, and then you have 2783, and of course that high from 2020, which would be a major achievement for the stock to get all the way back up there. And after being in a down cycle for quite a long time. If I had to break that down, what I see on my weekly chart, I'm going to go in a line chart because sometimes it makes it cleaner for me to see. I'd say there's 1, there's 2, 1, 2, 3, 4, 5, 3, 4. It looks like it's finishing 5 up on the weekly chart. And what that suggests is that we may get up to 2050 first, but what that suggests is that we're likely going to get a 3-wave, an ABC correction down. So what you do from there is you just go and you re-add. I got to make sure I'm into the right thing. and because I only want retracements. If it was going to do, even if we're calling this wave one, which is what I would do, of a new longer term uh, rally or move higher. And if I put it on there, and then let me just take this guy off. So here we have our retracements. And so you just follow the market. But if I'm going to say that that's the previous fourth on an Elliott wave basis, what we usually talk about is a correction is normally going to start to come into the previous fourth wave. And so that, or if we're looking for a wave two, you're looking for at least a 38.2% retracement to a 50% retracement. And 50% takes us into there. Sometimes you can get a 618, depending on how hard the market's going to get hit or what may be behind that correction. So I think that the market is due for at least somewhat of a correction, and you've got your markers are 1538 down to 1242. And it really wouldn't just, to me, it's just a correction and not necessarily saying that the stock's in trouble or the company's in trouble, et cetera, unless, of course, you follow it on that basis and that you actually have information like earnings and a forecast and et cetera that starts to tell you that this is overvalued. Now, if I'm looking at it on a weekly and on here, it truly has not moved back into overvalue. Though that also could be telling you there's some divergence. And what that divergence could be is that you see that how it really topped here, RSI wise, relative strength. And have we gone up and made conditional new highs? The RSI has not. So the divergence is bearish on that. But doesn't look too bad, but I think we start to pull back a little bit here. And then if you pay attention and you're just looking at these markers and the rest of the market looks good, or the sector that this sits in looks good, or it's coming out with better earnings, et cetera, because the earnings don't seem to be too bad. A little bit of a disappointment there, but it was okay. So forward guidance must have been looking good. You just kind of gauge it as to where it can come in and then make your decision as to, do I get long again or do I add to a position? All right, so let's kind of move this up. Oh, I see we got a lot of good one. OSPN, yep. VRT, it's our next one. Okay. VRT, rid of holdings. Obviously, I've spoken about this at some point, probably on the last AYT. Market is doing quite well. Now, this thing is really moving up and going really high. Let me get rid of those. And so what we originally had gone through is I put that down to there to show this extension. And we can do that again to get that initial gauge. And you can see it's really gone beyond. So I would have to say this was a 1, and this is a 2, or it's an ABC. I don't know what is outside of that. Let me go one step further here. Hold on 1 second. Yeah, it's a 1, 2, and this is a beautiful 3rd, or it's a humongous ABC, and this thing's going to fall off a cliff. But I'm going to go with the first one because obviously it's not been in existence too much before 2018. Correct me if I'm wrong, but that's the data. And so we're going to say 1, 2, and this is a 3rd, and it's beautiful 3rd. And if we had to talk about let's remove that. We had to talk about a pullback. See that pullback right there? I'm going to say this. See, we got 1, 2, 3, 4, and a 5. So it automatically tells us that we should pull back. Now, whether this is going to be counted as 5 up on its own, so we go up 1 degree as to what it is. Is it intermediate? Is it higher? I would have to probably think it's at least an intermediate. So if this is 1, 2, this is an intermediate 3rd. And that usually within a 3rd wave on an Elliott basis, those are the longest and the strongest. So you're going to get your best push. Now that goes in either direction, by the way. If you're doing 3rd wave down, your third wave is going to really cover a lot of territory. This, of course, is to the upside. So it's just the opposite. But the characteristics and the personality of that third wave remain the same. And that is that it's the longest and the strongest. And if you're ever doing Elliott, what the third wave cannot be is the shortest wave out of 1, 3, and 5. Doesn't necessarily have to be the longest, it just cannot be the shortest. So right now it is the longest because here's wave 1, that's 2, and there's 3. So again, I would look for a pullback. And let me just see if it's going to line up correctly, because see, you start to line up also with your moving averages. But this is a monthly chart. So I probably wouldn't stand too strongly on this because it's going to take a long time. Yeah, 618 brings us down to there. And that's of this whole move. But if I was just doing it, yeah, that is the third. So I'd have to do it from there. Now, if I start to bring it down, you're going to be able to look a little bit cleaner. Yeah, see, it already did. It started to give a little pullback, came up. So it's an A, B, and maybe going to get a C. And if I had to do, this is again a weekly chart. So it's a little bit more difficult to kind of put it all together. Let me change this color so I'm getting it out of that color, and let's put it into that color so we can distinguish. So again, if that is the A and that's a B and you're looking for C, first thing remember, and under Elliott, all C waves must be 5 waves. So you're always going to count it 1, 2, 3, 4, 5. So which could be here, this could be 1, 2, and you're getting ready to head into a third, which is going to bring it probably pretty close down to there. So again, not knowing anything about the stock or what it does or where what's behind it, I would say that we might have a start of the correction, and we need one more leg down as a minimum, and that would kind of give us down to here. Even 100% would be 68. It's trading at 121. Let me start bringing this out of the sky and let's see what this looks like inside here. Now, much different here. Let me get rid of that one. Yeah, that one. And so if we're just looking at this, that was a pretty nasty drop. Obviously, they didn't like something that this company reported. And yes, so once again, I'm just going to connect these. And if that's the A and this is a B, and we're doing a C wave, and that didn't come out too clean. Hold on 1 second. There, to there, come on, to there. Yeah, you're looking like this, at least 79, and there's your other 100%. Still could look pretty serious. Even if you're doing 100% of that, that's going to be, this would suggest 67. I think it's another serious drop. And what you're really comparing is, this is the initial drop, and you're comparing it to what you're looking for. And in that case, the comparison line comes in that if this is, we're going to label this A and label this C, C equals A. That's the most common, C equals A. And that's down here. And outside of that, the next most common is that C equals 0.618 of A, and that brings it down to 89. But that was pretty serious. So something happened that dropped that. And I would be very cautious here. And it just seems to have a lot of volatility all the way through it. So in terms of like, how would I trade it or what I would do, if you're an options trader, you're going to go look at volatility. That's premium. It converts to premium. It's like buying or selling. You're going to probably have a lot more. I don't want to say bang for your buck, but you're not either getting along a stock that you're in margin for. If like paying here, it's $121. So 100 shares is $12,000. So whereas an option, your commitment's a lot less. But I would say a little bit longer term, it's got one more leg to come down, and that leg should take it below that low. Yeah, because that all of this just does not. Let me get rid of it all. Let me get rid of that one too. This whole thing, that's too impulsive. That's too like get out of the water. That's very, very steep. It's almost like a Matterhorn drop. And so it should not be a one-off deal. So you get the rebound. And if this actually came back, let me just try, let me put in one more thing. I just want to see how high this has come back. Look at that. Look at back. 50%. So usually when you get a steep drop like that or any kind of a drop, if the market rallies back 50% and then tops, then it's done. It's going to start to drop again. And when it breaks 382, which is kind of come down and touched and getting a little bounce, plus even on that 4-hour chart, we've got, look at that. Look at your moving averages. They're just stacked together. Your 200 is flat, just keeping it right in a tight range, but it's getting ready to go break that 50. And if it does that, and this is an 8 and this is the 20, and if they kind of drop below the 50, guess what? It is in alignment to go down. Your moving averages would be in alignment for the market to move lower. Right now, it's trying to figure that out. But with that flat 200, totally flat, not a good sign. So I'd be thinking this has got more downside to go. And we want to go look at a firm. Okay, in a firm, wow, firm continues to do well. That's because they got a lot going on. Maybe we take it from that July low, August of 24. Okay, this is a good point. Because, and it went up. Oh, they like those earnings. This could be, again, a little of a blow off top and a finishing move. I would say we got probably one more little dip and one more high. And then that's really probably what I would think is it. And then we go into a much bigger correction. If I move out to the weekly chart, it's a little bit clearer because now we're coming off of the October 22 lows. Yeah. This is almost following what the larger indexes are doing. I would kind of say 1, 2, and then you're breaking it in, and that would be a 3 and a 4, and you're finishing a 5 on a larger scale. So the rally that started here has really started in October of 2022, and that's actually a major point within the S&P and the NASDAQ, that we had major lows in October of 2022, and what we're finishing is a longer term wave pattern up, which suggests that we are setting ourselves up for at least a drop back to this area. Now we're sitting at 77 and you're looking like it can come back to 21, 22. So because if this anything, 1, 2, 3, this would be the 4th and this ends the 5th, and we're coming into another corrective phase, the get-go tells you that that correction is likely to find its terminus, its end point, within the price territory of the 4th wave of 1 lesser degree, and there it is, as big as it is. So it's either this is a B, and we're finishing a C wave, which still brings it back to this level initially. So, and to be honest with you, I could say nothing about a firm. It's just that the market's overvalued, and the market, all of them go into a corrective phase. So everybody goes down. Okay, we're moving along. I'm going to go to Lilly, LLY. Lilly, good old Lilly. Lilly. Yeah, this one has just caught fire and stayed on fire. And of course, is just also like, look at that. I just think it's extremely hard to sustain. Now, Lilly is a heavily options traded stock. Lilly is in a lot of indexes and ETFs. And so it also gets caught up in not so much in what the company does, but gets caught up in the options. And if you have any familiarity with options, they have different levels, and they have delta, gamma, theta, etc. But there, with the indexes, there are gamma levels, there are volatility triggers, there are call walls, put walls, all these things that now really do dictate what happens to the underlying and what happens to our indexes. Instead of really looking at it as bullish or bearish, it's going to come down, it's going to drop, because what's the overall atmosphere of how people trade in terms of options? And so we have risk on and risk off type of trading, and that's what we call it. And a risk on trade is something that, they're selling the VIX, which is a cash index. They're taking that money, they're taking that cash, and they're buying the underlying volatility. So in other words, the indexes, if they're doing that and they're coming in, they're going to buy Lilly volatility. And what is that? How does volatility equate in an option? Premium. So they're coming in and they're buying premium, usually in the calls. And they might be buying the call and selling the put. So the dealer then, who provides that sale and purchase, has to go buy the stock. So it's a self-fulfilling prophecy that risk on is the market's moving higher. So I would kind of call it here, but once that's over, I think Lilly is giving you hints. It's, if anything, it's going to come down more. Yeah, it's just kind of like just following the market. But I think it's probably going to come down a visit here, or at least visit down here, um, and then regroup. You have all your support lines coming in. But it remains a strong player in pharmaceuticals, and that just really gives all of its stuff. Before I go on to Broadcom and Bidu, I just want to quickly just put out that, again, I have a Discord server or Discord channel, and I also, within Traders Helping Traders, which is my YouTube channel, I now have memberships. We're offering the memberships, and what we do each day is that I provide, along with the colleague who actually lives in France, so covers European, we are providing daily analysis on the S&P and the NASDAQ and the Dow and the Russell. And I personally add in spot gamma levels. So I talk about where the call wall, the put wall, volatility triggers are. What happens when they get broken? Either direction, get broken up or get broken down. What does that suggest, and what happens after that? So that's in there. And right now, they're very, very nicely priced for our memberships. All the memberships get access to our Discord channel, where we do then intraday give alerts. And so we also have an intraday service. And also, I also want to talk about, we have put together a course, and in that course is a day trader course. And it consists of 10 hours of one-on-one coaching with myself, and 5 hours with me, 5 hours with Sasha, and we go over indicators. We go over which ones you need to get on, and Sasha helps you put them on, and Sasha goes over what each one means, and that's what we use when we're giving our analysis. I also then go into what your mindset is, some of the Elliott conversations about gamma, conversations about what these options letters, Greeks, what they mean and how they affect what you may be trading on our indexes. And so we're running a promo. And if you need more information, please go to my website, www.logicalsignals.com, or you can go to info at lands, coaching.de. All right, let's move back. And so we're going to go to Broadcom, which is another amazing stock. Amazing stock that gets caught in a lot of stuff. So any stock that's going to get caught up in tariffs, you just got to really get used to playing the volatility in that thing, because it'll explode in your face. And you just have to realize that what is going to happen when our government announces that it's going to put new tariffs on China, it's going to put tariffs on this, whatever it's going to do, that is a negative for our market, because it's like, wow, are we going to make the chips more difficult for Broadcom to get, for NVIDIA to get? So how's that going to affect our AI sector? And so they don't actually think that through. The algorithms just go sold. And so we get things like this. And we get things like this. So each time we come in, we get this. Now, the benefit here of this one, this is when this was the tariffs on aluminum and steel. Of course, Broadcom, okay, no problem. But the other advantage is that the indexes on Sunday, this past Sunday for Globex, they gapped. But then everybody realized, well, wait a minute, that shouldn't be so bad. And they rallied it all back up. So this stock did not have the disadvantage or the advantage if you're a trader of gapping come Monday morning. So, and they just started buying it right away. You can see right there, just took it. And now they're just rallying it up. Now, if we're just looking again, I'm just going to open this up because I think this one follows more closely. It's going to follow in with the SMH or even with some of the other stocks and gets caught in these down swifts and up swifts. And the reason behind that is if you go look at the options, it's how those options are trading and what they're trading. So the thing to kind of remember here is that when you're putting this all together, that's what affects the stock. And you're wondering, why is it going up? Why is it going down? These were all related to tariffs. This was related to earnings. So, it changes very, very quickly. What I think for Broadcom on the daily chart, let me go one further. I need a little bit more data because here we have, this is the low. I'd be counting 5 waves up because it's going to fit in with the NASDAQ. It's going to fit in with the S&P. It's going to fit in with a lot of markets that it participates in, that it's a member of the index. And so if we're going to go here, then I'm counting 5 up. And if you can count with me, I can go 1, 2, 1, 2, 3, 4, 5 of 3, 4. It's got one, I think likely one more high because I'm also looking for that within the NASDAQ. I'm looking for that within the S&P. Now, the alternate view would be that's the high. And what are we going to do? We're going to drop down to at least here. That's your low. I'm going to say we're going to at least come down to here. And it could be much larger because if this finished a longer term high, so I got to bump it up a degree in terms of, the size of it, then you could be looking at coming back to here. Like this would be, we're looking for an intermediate degree pullback. That brings us down to here. If I'm looking for a primary degree pullback, that brings us down to here. So again, this is what's out there floating around, wondering, it's like, okay, when can we decide what's going to happen? I don't really have time to go over Baidu. Yes, because David's letting me know. Right now, I could probably get a minute and a half. Baidu, I think, is just, you got to pay attention to what's going on in China. That's about it. Yep, see? So anytime it's going to have tariffs and they're going to put it against China and China's going to put it against us, this stock's not going to do well. And that's just the bottom line there. So I am going to wrap it up. So I really do appreciate 30 minutes goes by very, very quickly. And again, send me an email. Now, you can send it to me, Michael at mjf1partners.com. That's my own personal email for my company. And I will you ask me a question, I'll give you information as best I can. And give us a look. Give us a look. I'll be doing a live stream on YouTube, live stream on Friday. And I'll be talking more about all the things that we're jumping into and any specials that we're running. And you'll get a chance to see how we actually analyze our screens. And so you want to go to my YouTube channel, which is Traders Helping Traders.com, but always look for my name.